Overwhelmed by the complexity of setting up sales tax in QuickBooks? If navigating tax agencies and rates makes your head spin, you're not alone. Today, we're simplifying sales tax setup in QuickBooks, step by step. Welcome back to Guide with Samuel. Let's break it down. QuickBooks needs to know 3 things: where you collect tax, what rate to use, and when to pay it. Step 1. Set up your tax agencies. Go to Taxes or Sales Tax in the settings. Click Add a tax agency and enter the details for your state, county, or city revenue department. This is who you'll be paying. Step 2. Create a sales tax item. A sales tax item is the specific rate you charge. You'll give it a name, e.g., CA state tax, and assign the correct rate. You can even set up combined rates for areas where you charge multiple jurisdictions at once. And that leads to my crucial pro tip: assign products and services correctly. Not everything you sell may be taxable. When you set up your products and services list, be sure to indicate whether each item is taxable or non-taxable. This ensures QuickBooks calculates the correct tax on every invoice automatically. So, just like that, you're set up to collect and remit sales tax with confidence. A proper setup goes a long way in avoiding costly compliance errors. Now I'm curious, what's the most complex sales tax situation you've had to deal with? Multiple states? Different product categories? Let me know your thoughts down in the comments, and subscribe for more clear-cut guides like this one. Thanks for watching. I'm Samuel, and I'll see you in the next video.